Guys, welcome to Intro to Wealth and Health. My name is Dele. I'm going to be walking you through GBK, the business, what they do, the industry they operate in, and just talk to you about investments in general, how you should view them, how you should go about investing, and a bit about crypto as well. So what we're going to cover in today's meeting. So the first thing is e-commerce and the unknown. Going to touch on crypto. Going to touch on GBK, what they do, projected earnings, how much you can make. Going to go through a few testimonials. Going to talk about the concept of staking, touch on risk and reward, and leave some questions at the end. So e-commerce, what is e-commerce? A few of you might have heard of it. Essentially is the buying and selling of goods online. I'm going to touch on how the e-commerce industry has evolved over the last 10 to 20 years, starting with the UK. So as you can see in the chart below, that is showing online spending as a percent of total sales in the UK. So as you can see in 2010, online spending represented about 7% of total sales. So essentially all the sales that happen in the UK, 7% of them were done online, and that has grown by 16.3% on a yearly basis, and by 2021 online sales represented 31.3% of total sales in the UK, and it's projected that by 2029 this will increase to 91.6%. So it's a strong growth trajectory. Why it is important, because GBK is an online advertising company by nature, so that is their primary primary way of generating revenue. So as the e-commerce industry grows and increases in size, we expect that GBK's market share and revenues will increase likewise. Going on to the second page, there's a few charts here. We're going to start a chart on the bottom left, which represents, again, just online spending as a percent of total sales, but this is for the US, and it shows a 20-year horizon plus a 10-year forecast. So as you can see, in the year 2000, online sales represented maybe about 1% of total sales. So it wasn't that popular back in 2000, but that has grown at a rate of 15.4% in a 20-year period. So by 2021, online sales represented about 12% of total sales in the US, and it's projected that by 2030, especially given the COVID situation, people being forced to stay at home and shop online, that kind of caused people to be more confident in online selling and buying. So because of that boost in online sales in that period, it's projected that by 2030, online sales will represent 34% of total sales in the US, which is a good sign. The chart to the bottom right really illustrates, how GBK, are able to generate revenues. It kind of signifies the market that they're in. So that chart is showing essentially what people are spending majority of their money on in terms of advertising. So what medium of advertising people are using to advertise their goods and products. As you can see below, there's many types of mediums that can be used. So there's cinema, magazines, newspapers, radios, out-of-home TV, and digital. Digital just being essentially online advertising. As you can see, all the other sources like newspaper, radio, out-of-home magazines, they're becoming more obsolete. So a smaller percent of businesses are using those mediums to advertise their goods and services, and TV and digital are probably the top performers. But even more interestingly, digital advertising has overtaken TV. In 2019, it represented 42.8% of total advertising spend, whilst TV only represented 33.1%. So it just goes to show people are more aware that consumers are on their phones a lot more, they're online a lot more, so they're pushing funds or advertising funds towards those mediums of advertising to try and convert and generate more sales. Of course, GBK is an online advertising company, so as businesses push more funds towards online advertising, GBK expects to receive a lot more business as a result of that. Moving on to crypto. So what is crypto? Essentially, it's important that we understand what crypto is because GBK are heavily involved in the crypto industry as well. And they do pay us in a particular cryptocurrency, which I will talk about more later. So what is crypto? Essentially, it's a digital and it's decentralized. Essentially, it's a currency but is based online and is used. You can use it to buy and sell things, or you can use it to store value. A blockchain is essentially just a chain of transactions. Essentially, so it's how it's like a ledger that kind of records all the transactions that happen within the crypto network, and that's how that works. But we don't need to go into all the technicalities about crypto. This is not a crypto a seminar, but it's good to have a general knowledge about it. More importantly, what are the different coins that we should know about? So there's Bitcoin, which is a popular coin. Everyone's familiar with Bitcoin. Essentially, Bitcoin is this value is derived based on supply and demand and people's views about Bitcoin as an industry or Bitcoin as a currency and where they see it going in the future. So people that are more optimistic about Bitcoin and its uses will, buy it, pushing the price up. And then when people become less optimistic about it, they'll sell it, which pushes the price down. So essentially, it kind of is a volatile cryptocurrency. An altcoin is any other coin that isn't Bitcoin. So like Ethereum, Dogecoin, different coins of that nature. The coin that we are mostly interested in, however, is a coin called a stablecoin. And a stablecoin is a coin that is linked to a fiat currency. So what does that mean? So essentially, a stablecoin can be linked to the pound, it can be linked to the dollar, it can be linked to the naira, any currency that is out there. So the coin that we are most interested in is a coin called USDT, which essentially is a cryptocurrency. However, it's linked to the US dollar. So essentially, you can always convert one USDT to $1, and there's forces in place that ensure that relationship continues. So if you have USDT, there should be no fear of it going down in price, and there's no opportunity for it to go up in price as well because it just links to the dollar. If the dollar loses value, then USDT loses value. But we all know that the dollar is probably the strongest currency in the world in terms of the most stable currency in the world because a lot of countries hold dollar reserves. So fluctuating dollar values or USDT values are the last things that we should be worried about as GBK employees. GBK, what do they do as an industry? What does the business do? How do they generate revenues? So it's not a burger company, it's an advertising company. So they specialize in working with different vendors that sell goods on the likes of eBay, Amazon, Shopify, all these different online selling platforms. So what do they do in a nutshell? Essentially, they increase the ranking of promotional items by driving traffic towards them. So what does that mean? So essentially, if you go on Amazon and you want to buy, for example, a water bottle, and there's different types of water bottles, but there's a particular water bottle that you want to buy. However, there's different sellers that are selling this same type of water bottle. Essentially, and imagine there's so many sellers that when you search it up in the search engine, there's about 6 pages of results for the same water bottle. So a vendor that's on the 6th page may not get that many sales because a lot of the time people usually buy a product and don't go past the 2nd page. They usually buy the first one they see or the ones they see on the 1st page. So the vendor that has a product that's on the 6th page will contact GBK and ask GBK to drive traffic towards their product. And by driving traffic towards that product, it increases its ranking on the likes of eBay, Amazon, and it is more likely to show up on the 1st page. and essentially is more likely to make sales as a result of that. So again, GBK take a fixed fee from the vendor to perform that service, and then they essentially ask us to go on their website where they've set up the whole page, an algorithm that essentially all we do is go on the website and click on the products of their choice, and as a result of doing that, we drive traffic towards it, and that's essentially how revenue is generated. How do I become part of the business? Essentially, you need to be on a certain VIP level. The VIP level essentially allows you to drive traffic towards a different range of products. It also allows you to drive traffic towards a certain number of products a day. So, but we'll talk more about that on the later slides. There is an initial deposit that you need to pay whenever you join GBK. That's strictly for the purposes of refunding the vendor should you not perform your tasks for the day. So essentially, when GBK hire you to work with them, they expect you to go on the website every single day and click on the products of their choice. It usually takes about 10 minutes a day to perform all your tasks, but should you forget to perform a task for a day or a week, then essentially the contract that GBK has entered with the vendor hasn't been, they haven't, held up their end of the stick. So essentially, GBK will need to compensate the vendor for the services that have not been performed. Because essentially, GBK go to the vendor, look, we're going to drive traffic towards your product 7 days a week, and if we don't, fulfill that promise, then GBK will be obliged to repay the vendor as a result of that. However, your deposit isn't compromised as a result of that. If you choose to leave after 3 months, the deposit is fully refundable. If not, if you want to continue, then the deposit is rolled over, and then you can continue tapping for as long as you want to stay with GBK. So that's how that works. How you pay deposit, the person that invited you will give you more details about that. There's also a group chat that I will urge you to join where you can ask all these questions, but essentially all the money gets paid in through a cryptocurrency called USDT. So you'll need to buy a specified amount of USDT on your crypto wallet and transfer that to the GBK address, and then you can essentially buy the package, the VIP package, on the GBK website. There's only certain wallets that you can use to perform this service. The wallets that you must use must facilitate the TRC20 network. You don't need to get too bogged down with these technical terms. If you're confused about it or you need help, essentially just go into the group chat, ask a question, and there's a lot of admin staff there that can help you out as well. So moving on. So a few people are wondering, okay, so how does it work? How do I drive traffic towards these different products? I'm not an IT expert, so how can I do it? And I've got a video here that illustrates how it works. So I'm just going to click play on it and I'm going to walk you through it. So this is the main GBK homepage. Essentially, you click on grab, and what it's going to do is going to search for a product in the database. Takes about a couple of seconds. So essentially, this product here, this Asus ROG Strix X570i gaming. I think it's a gaming console or something like that. I'm not too sure what it is. Essentially, this product is selling on eBay, and the vendor isn't getting that many sales. So he's asked GBK to drive traffic towards it, so it can rank higher above its peers. So essentially, all we do is click success, and we are compensated with 60 cents for that marketing campaign. So it usually takes about less than a minute to do a campaign. Depending on the level, you can do up to a certain amount of campaigns a day. So I think it's 50 a day for VIP 3, and it changes for each different level. But in a nutshell, it takes less than 10 minutes to do all your tasks for the day. Moving on to projected earnings, how much can you earn with GBK? How does the payment structure all work? So before we get into that, it's important that we understand what a VIP level is. A VIP level gives you access to different types of products. The more expensive the types of products that you're driving traffic towards, the higher the VIP level. Essentially, you get a commission based on the value of the product that you're driving traffic towards. Also, the higher the VIP level, the greater amount of clicks you can do, or the greater amount of products you can drive traffic towards on a daily basis. Hence the greater amount of money you can make with GBK. So this is essentially the payment structure. There's a lot going on, so I urge you to follow me to the bottom table below, where I'm going to walk you through how it all works out. So essentially, the blue highlighted section represents the VIP levels that you can join today. There's no entry requirement in terms of, you must invite a certain amount of people, nothing like that. Essentially, you just join on the specified level by paying the entry fee, which is the deposit that we spoke about earlier. And given that you tap on the products every day for 10 minutes, your monthly commissions are outlined in the fourth column. So essentially, within 20 days, it usually takes, you make your initial deposit back, and then you're into profit. Bear in mind, this deposit entry fee is a one-time fee, so you don't pay it more than once, and you should get it back after 3 months should you choose to leave GBK. The team commission here represents the commission you get from people that you've invited, people that are part of your team. Now, for VIPs 1, 2, 3, and 4, there is team commission. I mean, if you invite anyone, regardless of what level you're on, you'll be entitled to team commission. I just haven't outlined it here. However, you can receive team commissions on these levels as well. And your total commission is the sum of your monthly commission plus your team commission for each respective level. The green section represents the levels that are only attainable after you have met certain requirements in terms of your team size, and more specifically the people within your team size. So for example, VIP 5, there is a deposit that you have to pay, which is about £2,200, but you can only attain this level after you have 30 VIP 4s under you. Now, that doesn't mean you need to invite 30 people off the bat. Essentially, if I invite James and James invites 10 people, I will now have 11 people under me. So that's how it works. And if all those 10 people invite 20 people, or let's say all those 10 people invite another 5 people each, then I would have 51 people under me. So you haven't got to go out and invite 30 people. Once you invite a few family and friends, and they invite people, your team will grow quite substantially. I will give an example of my team size later to illustrate that. The monthly commission, this is generated from you going online every day and tapping on the various products. So if you do that every day, you should be making about 3,400 on a VIP 5 account. And your team commission, now this is just a calculated number, could be more, could be less, probably more because I've understated a few things, but the minimum amount you should be receiving a month from your team commission is about £990. And that equates to a total commission of £4,400. Similar concept for VIP 6 and VIP 7. So that's how they all work. But yeah, in a nutshell, there is room to make a lot of money when you go out and invite people. However, I must stress, you don't have to invite people. The blue levels are attainable off the bat. If you're not the kind of person that can go out and invite people, or maybe you don't want to bring people into things that you're doing, that's fair enough. The main source of income is through the marketing campaigns that you will be producing on a daily basis, and that's what GBK compensates you for. So VIPs 1, 2, and 3, and 4 can still make you a substantial amount of money just by performing those tasks. I'm going to move into the commission structure because people are thinking, well, how does this team commission work? So if I follow along, there's 2 graphs here. We're going to start on the first table. So the first table represents the one-off commissions that you get as a result of inviting people. So you've got VIP 1, 2, 3, and 4. Let's start with VIP 4 because that's the highest level attainable without inviting nobody. So say you join GBK and you're a VIP 4 member. If you invite Dave directly, then Dave will be your grade A member, and you'll receive a $90 commission as a result of you inviting Dave, which gets deposited straight into your account. If Dave then invites Mary will be your B grade member, and you'll receive $60 as a result of Dave inviting Mary. And if Mary invites John, then you're going to receive $30 as a result of Mary inviting John. However, if John goes out and invites Sandra, then the line cuts off after your grade C. Unlike a Ponzi scheme where it keeps going on, GBK are practicing something called affiliate marketing, which only compensates you for inviting people. However, you know, your commissions, the money you make isn't solely as a result of you inviting people, it's from producing those marketing campaigns on a daily basis. So yeah, and people ask also, but why do GBK, why are they doing affiliate marketing? Well, as GBK know, we all know advertising costs can be quite high. So rather than GBK paying a company to advertise for them on different platforms such as Google, they'll rather compensate their workers to do that for them. They are a bit of an underground company as well, for certain tax purposes. So in order to save costs on tax and advertising costs, they rather give those pay the workers to actually fulfill those advertising services for them. The second table represents the residual commissions that you can get as a result of you inviting people. So similar concept, your A-level members are who you've invited directly. So each person that you invite directly, you get 3% of their daily revenue that they generate. The person's revenue isn't compromised as a result of that, but GBK just pay you a residual 3% amount of how much they make throughout their lifetime at GBK. Again, the B-level members are the people that your A-level members invite. You get 2% of how much they generate, and your C-level members are the people that your B-level members invite, and you get 1% of how much they generate. Anyone that your C-level member invites, you will not be able to get any commission off that. It cuts off after the third level, or the C-level, I should say. And all these commissions are presented in US dollars. Before I go into the testimonials and show you how people are performing, I'm going to show you my account and how I've done over the last couple months with GBK. So if I go to my home screen, I'm currently a VIP 5 member. I've been with GBK since early January. And I'm going to show you how my screen. So essentially, yes, commission today, 152. That's how much I make from tapping every single day, which is about $152. So every single time I go on automatic grab, I get that a day. And then for my team commission, how much I make from as a residual income from the people that are in my team, it's about $131. So close to $300 a day. And my team is quite big, and people might be thinking, well, I can't go and invite 1,000 people, and you'll be shocked to find out how many people that I've actually invited directly. So if I go to my team stats, my direct members are only 21 people. So I've only gone out and directly invited 21 people. However, my team size or number of VIPs I should be looking at is 210. Why is that? Well, that's a result of these 21 people going out and inviting other people who go out and invite other people, and they're still under my team, and I still get a commission based on that. So my level 1 members are the people that I've invited directly. I'm going to show you a few of their results. So the first person is called Blessing. She registered on the 17th of January. Today is the 12th of March, by the way, in case anyone's wondering. But I invited her on the 17th of January. She started on a level 3 account, and she paid $600. And she's withdrawn about 1,900 within the 2-month period. So made her money back, and now she's in profit. David Ojo, he started on the 21st of January. He recharged 700 as a result of him starting on level 1, and then 2 days later or a couple of days later, I said, you know what, let me do level 3. So you have to pay the level 3 deposit as well. And he's withdrawn about 1,600. Similar case for Sophia M, starting on the 22nd of January. She also started on level 1 and then moved to level 3. She's withdrawn about 1,035. Esther, 23rd of Jan, again level 3, 600, withdrawn over 1,000. Eli Kefas started on the 24th of Jan. He started on level 1, then moved to level 2 later, so he's still looking to make back his initial deposit. Sams is a VIP 4 member. Started on the 24th of January. Again, we charged 1,900, and they've withdrawn about just under £3,000. As you can see, a lot of my team members have actually made their money back. Faves VIP 4 has made about 4.5. Recharge 1.7, started on the 25th of January. I am Les, he's a VIP 5 member. And the recharge for the higher levels is as a result of each time you level up to a new level, you will need to pay the deposit amount for that new level. Again, should you choose to leave after 3 months, you can reclaim all that deposit amount back. But nonetheless, he started on the 28th of January and he recharged 5,000, but he's made £7,500, dollars I should say, since joining. So the results have been quite good for my team, but majority of my team have started in 2022. I mean, GBK has been going on for quite a while, and I will show you the results of those people who started a lot earlier. So if I go to the testimonials, the first person here is Super One. They started on the 30th of April back in 2020. They recharged 5,500. Again, they're a VIP 5 member, so they've paid deposit for each level that they've leveled up to, and they've withdrawn about $174,000. Leslie's 687. Again, she's a VIP 5 member, so people might be thinking, well, I'm not really the type to go out and invite people to get to that level. Lacey 687 is a VIP 3 member, so evidently they haven't invited no one, or they haven't actually leveled up to the higher level. They recharged $600 back in 2020, back in May, and they've withdrawn about £21,000 in that time period. Rido, VIP 5, he's withdrawn about under 500k, started in 2018. Ada, VIP 3, only recharged 600 and withdrawn about 17,000, started in 2020. So again, Bang 66, started in 2018, VIP 6 member, so he's done a lot of advertising in terms of inviting people. Recharged 12,500 as a result of that, but he's withdrawn over £1 million since his time at GBK. So just goes to show that GBK has been around for a long time, and the people that have been involved have made a lot of money. However, GBK has plans to expand in the future and enter into different ventures, so I don't see them going anywhere anytime soon, and I will touch on those future plans in a minute. So staking with GBK, this is a project that GBK, I think they currently undergo this project privately, so this is what they do on the side as well. However, in the near future, they're looking to expand and allow us, the employees, to also take part in the staking project as well. So how does that work? What is staking? I'm going to talk to you about how traditional banks lend the money, and then I'm going to walk into how that's done in the crypto world and how we can make some money from that. So if we start to the left of the screen, we've got somebody here, let's call this person Dave. Dave is a ordinary citizen, makes about, let's say, £40,000 a year, but they want to buy a house that's worth 150k. Of course, he hasn't got that money to buy the house outright, so he goes to a lender, and the lender says, Dave, we're going to lend you 100k to purchase the house. That's all we're going to lend you. I'm going to charge you 16% annually on the 100k that we've lent to you. You'll need to provide the extra 50k for the house yourself. So Dave will take the 100k from the lender, save up his money, save up 50k, and then purchase the house. Worst case scenario, so if the borrower fails to keep up with the monthly interest payments, the lender will take ownership of the property. So this property is essentially collateral, and that's how a lot of these banks do business. If they lend you money to buy a house, that house, they have ownership of that house until you pay off that mortgage. So in the worst case scenario, if you do not pay your monthly installments, they normally give you about 3 months of arrears. If you're more than 3 months in arrears, they will take ownership of your house, and then they will sell the house for 150k and take out the 100k that they lent to you, and they'll give you the rest. So there's no risk on the lender's side of things. The only risk in this case is if the house value goes down well below the 100k mark value of the loan. But essentially what lenders do to kind of mitigate this risk is if the house is worth 150k, they won't lend to you 150k because it's too much risk. They'll lend to you a smaller amount than the value of the collateral, which is the house. I hope that makes sense. So even if the house goes down to 120k in value, they can still sell the house for that amount, take out their 100k that's owed, and then give the borrower back the 20k. So the borrower in that case would have suffered a 30k loss because they put down 50k and they're only receiving 20k back. Again, if they pay back the loan and keep up with the monthly loan agreements, then that case won't happen. But again, that's the worst case scenario. So to sum up, the collateral in this case is the property, which is worth 150k. The loan is 100k, and there's something that they call in investment terms a loan to value. And the lower the loan to value, the better. Essentially, how much are we loaning you based on the value of the thing that we have as collateral in case the loan goes bad. So if it was 100%, then the lender would have lent John, for his name, but would have lent him 150k, which is very risky because if the house goes down in value to 120k and John doesn't keep up with his monthly payments, then the lender can only sell the house for 120k and the lender's taking a 30k loss. So the loan to value in a lot of times is less than 90%, and for certain other mortgages less than 75%, just so the bank aren't taking on too much risk on their end. So it's important that we understand how this works. But a lot of the time banks don't, and banks can make a lot of money doing all this stuff, and they do it for cars, they do it for property, they do it for anything that they're lending money to. There'll always be collateral that they are going to be obliged to collect in case the lender or the borrower doesn't fulfill their monthly payments. So the banks, as a result of that, don't take on that much risk when lending money. However, they may be charging the borrower maybe 20% a year, and we all know how much the banks pay us in our current account is less than 1%. So they're keeping that whole, and essentially they're using our money to lend to these people. So that's what banks do. And the amount that they pay us is so small compared to how much they're actually generating from that lending business. However, crypto changes that and gives us an opportunity to actually take part in that lending market ourselves and actually realize those returns that banks realize. So how does it work in crypto? There's something called DeFi lending, which means decentralized lending. So this is called centralized lending because essentially it's done through a bank, a centralized institution. However, this is decentralized lending, straight from the lender to the borrower. There's no intermediary in the middle, which gives a lot of room for interest to be made. So how does that work? So essentially, let's take this person called Peter. Peter wants to buy a car. He's thinking about buying a car. The car's worth 20k. He hasn't got 20k to actually spend on the car at the moment. However, he does have one Bitcoin. Peter's a crypto enthusiast, so he holds a lot of Bitcoin, and currently his Bitcoin is worth 40k. However, he doesn't want to sell his Bitcoin because he thinks Bitcoin is going to go to 1 million. So he wants to hold on to his Bitcoin and doesn't want to sell it. He can easily sell his Bitcoin for 40k, receive the 40k and buy a car, but he doesn't want to because he feels like the prospects for Bitcoin are very positive, and I don't want to let go of my Bitcoin holdings. So he goes to a lender in the crypto market and says, look, I want to buy this car worth 20k. And the lender goes, okay, cool, I'll lend you 20k to purchase the car. I'm going to charge you 20% interest on that 20k. However, you must transfer me your Bitcoin to hold as collateral. So say, I'm going to hold on to your Bitcoin worth 40k as protection in case you don't pay back the 20k and you don't pay back the interest that's owed. So what is the worst case scenario in this situation? Well, if the borrower fails to pay the interest, the lender will sell the borrower's Bitcoin for 40k, receive the 40k cash, that's how much it's worth, and then retain the 20k that was lent. It was the gaps. I'm going to sell your Bitcoin because you failed to make your interest payments. I'm going to sell your Bitcoin in the market, receive 40k, that's how much it's worth. I'll give you back 20k, but I'm going to keep the 20k that I lent to you. They may even take the interest that's owed as well. So them taking the Bitcoin away from or holding the Bitcoin as collateral is protection against anything that could happen. Also, if Bitcoin falls in value, because Bitcoin's quite volatile, so it can go up and down. If Bitcoin falls in value, the lender will sell it once it hits 20k. So once the value of Bitcoin gets to 20k, then the value of it is going to be less than how much the lender's actually lent out 20k. So essentially, he will sell it, the Bitcoin, once it gets 20k, receive that 20k, and tell the borrower, look, your Bitcoin fell in value. As a result of that, I'm gonna liquidate it, which is called selling the Bitcoin, receiving cash, take my 20k, pay back the investors, and so you've made a loss. You've lost money on this investment. I mean, the lender still has the borrower still has the 20k that was lent to them originally, but in all cases, the lender is protected against any adverse situations by holding that Bitcoin as collateral. Again, similar to the banking concept, you've got your collateral, which is your Bitcoin, worth 40k. The loan amount is 20k, and the loan to value is 50%. Essentially means I'm only going to lend you 50% of the collateral, to say I need some space in case the collateral falls down in value, and of course, if you fail to pay back the loan, I can easily sell your Bitcoin in the market, and I can easily retain my 20k that I lent to you. So that's how DeFi lending works, and that's what staking is in a nutshell. However, there is no bank in the middle. That's, because essentially what the bank does, you pay the bank money every single month from the salary, goes straight into the bank, and the bank uses that money to lend out, and lend out to people who want to buy who want to take out mortgages or buy cars. They take a lot of that interest for themselves and pay you pennies. But in the crypto world, there's no bank in the middle, so you can essentially get all of those interest returns for yourself just by taking part in crypto lending like this. And it's the similar concept to how the bank does it. There's the collateral there which keeps your investment safe. However, the returns are a lot more compared to how much you get in a centralized lending situation. So that's that in a nutshell. I'm going to talk about risk and reward. I think it's very important for people to understand the dynamics between these two and how it all works out. I think people, they're fearful when it comes to different investments that promise to pay high returns, and they want those investments to be as safe as possible. But again, I think a knowledge about how risk and reward actually work in tandem will help you understand what you should expect and how to actually go about protecting yourself against any adverse situations. So moving on, the top left shows a graph that represents the relationship between return and risk. And as you can see, as your return goes up, so as you get more return, let's say 5,000%, the higher the return you get, the more risk that's going to be associated with that investment. There's no two ways around it. That's just the way it works. If you want less risk, your return is going to be less as well. I work in investments for my 9 to 5, and it doesn't even matter what investments that we invest in. And these are, what should I say, professional investments such as stocks, bonds, anything. The higher the return on something, on a stock or a bond, the higher the risk. They go hand in hand, and people need to realize that relationship. So that doesn't mean, okay, so I'm going to be scared about investing in anything that's high risk or high return. There's ways to go about diversifying your portfolio so you can actually take part in those high risk return investments. However, you don't lose all your capital. So, and I'm going to teach you how to do that. But before, so I'm going to tell you, look at some examples about certain stocks, what they've returned, and their risk characteristics. So let's start with Tesla to the top left. So this is a chart of Tesla's return over the 10-year period. And again, when the stock of Tesla came out, of course Tesla are a company that they invest in or they build electric cars, and that's their main source of revenue or their main business proposal. And when the stock came out, the electric car industry was very unknown, ambiguous. No one knew the future of it. No one knew what to expect. Now, what does that represent? That's risk. No one knows what to expect. No one knows what's going to happen. Tesla could have easily tried to build an electric car, and you know what? It didn't work out. So if you invest in Tesla at that point, at those early stages, your risk is going to be so high in terms of you don't know what's going to happen. However, if it goes really well and Tesla are the first ones to produce electric cars, and they can sell as many in the world and make a lot of money from it, your returns can be super high. And there's no way about it. There's no way you can ask Tesla, tell me what's going to happen in the future. I want you to really promise me that you're going to make sales. I want you to really promise me that, Tesla's going to sell all around the world and people are going to stop using all these other cars. Tesla will tell you, look, we don't know what's going to happen. We know what can potentially happen, and on the positive side, and what can happen on the negative side. There is risk, but now you have to decide if you want to invest in not or not. Tesla can't ease your mind. They can't lower the risk. I hope I'm making sense. And that's how it works. And as you can see, if you invested in Tesla in 2010, the stock was worth about £4, $4.13. And for about 9 years, the stock barely done anything because they were still developing cars, they were still working on different initiatives, and the stock was doing nothing. And that's all the risk. You've invested in something and it hasn't really moved. And only in 2020, when it finally clicked for them, the stock, soared up, and you would have made about 21,000% on your investment. Now that's including compounded interest as well, which I don't need to go into too much detail about. However, this just shows the risk characteristics of Tesla and why it's risky, because there is unknown. And then once they start making sales, of course, people start buying the stock, and it goes up. But those who took a bit of risk early on and said, you know what, I don't know what's going to happen, but I'm going to maybe put about 10% or 5% of my money in it and hope for the best, would have realized some returns. It would be stupid to put all your money in it because no one knows, but again, it would be silly to put nothing in it because, if they've got a business plan and it sounds good, then yeah, you invest an amount you're willing to lose, and you would have realized these returns with Tesla. We've got another we've got Bitcoin to our bottom left over here. Just to add, Tesla's annual return now is 140% a year. We've got Bitcoin over here. So again, similar case. Back in April 2006, it was worth about $316, and it didn't move much. It spiked a little bit and dropped a little bit, but again, no one really knew about Bitcoin. No one really knew what it's going to do. Nobody really understood cryptos, and there was no way to tell whether it was going to do well or not. If you ask the person that invented it to promise you that he's gonna make all the money and it's gonna go up, he'll tell you, look, I can't promise you nothing. I've got an idea. This is what I expect. However, who knows? It's unknown, and that's why the price was so cheap at this point. Again, if you had a little bit of faith and said, no, I'm gonna invest smartly and put a small percent of my money in it, and maybe put the rest of my money, the bulk of my money, in something that's more certain, you would have taken part in the 13,000% that it returned over that period. Again, high risk, high reward, and that's how it works. Bitcoin's annual return averages to like 93% a year. And now we're going to take a company like McDonald's. Now McDonald's is a steady company. Everyone knows what to expect. They sell fast food, and they've been doing it for years. If you invested in McDonald's early on, it cost you 75 cents. But let's say you invested around 1992. As you can see, the chart is quite different from McDonald's. It's going up quite steadily. Throughout the 20-year period, it's been going up, which means they've been doing well. They've been doing what they do. They've been doing what's expected. That's the kind of stock McDonald's is. It hasn't shot up drastically like Tesla or Bitcoin because there's less risk. It's more expected. It has realized 30,000% return since it started. However, it started a lot earlier, 1982. The Tesla and Bitcoin both started in 2000s, mid 2000s, I should say. So the annual return for McDonald's is 34%. Nothing exciting because they're a solid company. You know what to expect. There's no element of surprise. So the stock isn't going to shoot up randomly. And again, that's still a good investment. I would say put the bulk of your money in something in McDonald's. However, I would also say allocate a small percent of it to your Teslas, to your Bitcoins, in case they do shoot up. However, if they go down, at least you've got the bulk of your money in something that's safe. And that's how you should think about investments. It's not, okay, I'm going to invest in this one thing and it has to work out for me. If you think like that, you won't make money. And also, if you think, okay, I'm just going to put all my money in McDonald's and be safe, that's also is all right. But at the same time, then you won't take part in those brilliant returns that you can actually attain from investing in things that are more risky. But when you invest in something that's risky, you have to take on the risk, and you have to realize that there's risk, and there's nothing that pays you a high percent in terms of returns that has no risk. That's just the way it works. And I'm going to teach you about how you can go about diversifying your portfolio and, kind of mitigating and reducing risk. So just to touch on GBK, the chart in the top left shows you, no matter what level you start on, GBK pays you 5% a day. So your monthly returns based on how much you've deposited equates to 5% a day, which equates to about 12,000% a year, which is a ridiculous amount of return. And what do we know about risk and return? Well, if the returns are that high, the risk is probably high as well. I'm not gonna come in and tell you, oh, GBK is the safest company in the world, so there's nothing for you to worry about. There is risk. I mean, they haven't got an online presence. They're relatively new, started 2008 and 2017. They're not regulated by by any sort of authority. It's all in cryptos. They pay you in, so yeah, there's risks involved. And based on the high returns, there's no way I can tell you there isn't risk involved. And then you've got something called the S&P 500. Now, what is that? That is basically all the top companies in America put into one fund, and you're just investing in all of them at the same time. And the annual return on that is 10.7%. So every year, if you invest in it, you should realize 10.7% a year. GBK, you realize 12,000% a year. The S&P, which is just all the stocks in the world or in America, you realize 10.7% a year. Now, a lot of people think to themselves, oh, 10.7 is too small, and so they don't invest. But those same people will say, oh, 12,000%, oh, that's too risky. And it's like, you're thinking about things the wrong way. It's not one or the other. The best thing to do is invest in both and allocate how much you assign to each investment based on your risk tolerance. That's called, and then you end up getting a risk-adjusted return. So I've just for the sake of simplicity, I've added in some stats about the risk of loss below. So for GBK, I can't calculate this since it's just an arbitrary number. I've just assumed the risk of loss is 50%. So there's a 50% chance that you can lose all your money. And in the S&P, the risk of loss is 15.7%. And I've actually gotten this number from statistics that are out there about the S&P. So there's a chance you can lose 15% of your money if you invest in stocks. Cool. And over here, I've outlined a way that you can, it's just one way, that you can allocate your investments to kind of increase your returns at the same time minimize your risk. So if you have £10,000 of capital to invest, you can either do this, you can invest 0 in GBK, 0% in GBK, nothing, and invest everything in stocks. Your return to GBK will be 0 because you've put nothing inside, and your return to the S&P will be 10,910. You would have made £910 as a result of you just investing everything in the S&P. So your total returns is 10,900, and in the percentage terms, it's 9%. I've adjusted it for the risk, so that's how I've got that 9%, and your risk is 16%, essentially the 15.7% over here, and that's how that can work. You can also say, you know what, that return is a bit too small for me, and I'm willing to take on a little bit more risk. So you say, you know what, I've got the same 10,000, I'll put 25% in GBK, and I'll put 75% in stocks. Now your return from GBK is going to be 17,500 based on the 1,200% that you can get with GBK, and then your return on your stocks is going to be 8,000. So altogether, you have 25,600 pounds return. That's the value of your portfolio. I should say your return will probably be about 15,000, but the total value of your portfolio will be 25k. In percentage terms, That's 157%. Again, what you've done, you've taken some return from GBK, you've invested a portion in GBK, and you invested a portion in the S&P, and your risk is only 24%. So by doing that, you've kind of increased your risk, but you haven't gone mad and said, I'm going to put everything in GBK. Because if you put everything in GBK, then your risk is 50% of loss, which is the case down here. Everything in GBK, nothing in the S&P. Your return, you can make 70k from the 10,000, but your risk is 50%. So I wouldn't advise that. I don't put all your money in GBK. But what I'm trying to say is, if you have £1,000 to your name, there's different levels on GBK. Maybe do level 1, which costs you about $100, and then put the remaining $900 in something that's safe. And that's how you sort out your portfolio. It's not I need to be all in or I'm not in. We need to learn how to invest, how to allocate our funds, how to spread it out. And by doing that, if one doesn't work out, you haven't lost all your money, and you've got something your money in something that's more safe that does work out. Best case scenario, they both work out, and you make money on both. But it's about just finding the balance according to your risk tolerance. So I hope I've been able to help you in that regard. I want to go on to some frequently asked questions. How can I increase my monthly income from the initial base level, or you need to upgrade your VIP level to earn more commission? Can the number of tasks be increased? Yes, it can be increased when you upgrade your VIP level. Not sure about this. It seems too good to be true. It's not too good to be true. Remember, high risk, high return. So I'm not going to tell you the returns are crazy and there's zero risk. That is impossible. There's no investment opportunity that offers you high returns and no risk. They are positively correlated. Can you invite somebody in a different country? Yes, you can. As long as they can have a crypto wallet and a crypto broker, they can be invited to join GBK. You're crazy. It sounds like a pyramid scheme. It's not a pyramid scheme. It's a high return investment, again, which has high risk. I will also mention though that the crypto space is very new, and there's no regulation inside it. So there's a lot of money to be made in this day and age. Hence why there's so much return. A risk would be soon, and there are a lot of talks about governments coming in and regulating it. And what regulation always does is just lowers that return, and in forms of taxes, etc. How long does it take for deposits and withdrawals to arrive? Normally within 5 minutes. There has been a bit of a slowdown recently due to the increasing number of GBK members, but it shouldn't be more than 1 day, maybe 3 hours maximum. If I don't finish my task today, can I continue the rest tomorrow? No, it resets at 12 a.m. each day. So you have between 12 p.m. You have between 24 hours, I should say, to complete all your tasks for the day. If you don't, then you will have missed the money you could have made for that day. There is a 1% fee whenever you withdraw money. How can I invite my friends to join? Nobody can register without an invite code. So whenever you invite your friend, you'll give them your invite code, which you can find on your page, and they can join with that. And of course, you get paid when your friends do clicks based on the commission structure. So just to end in summary, I will say the way to get started is to quit talking and begin doing. That was saying by Walt Disney. Again, I'm not encouraging anyone to be erratic and put all their money into GBK. I promise you, I did not do that. I assigned a small percent of my net worth into it and said, you know what, I'm willing to lose it or invest it because I've got majority of my investments in something else. And the VIP levels give you choice to what level you want to start on, and that's it. And that's how investments work. It's not you choose one investment and that investment has to work out. If you have that mentality, you won't get rich, you won't make money, and you won't be a smart investor. So I will say, really look at your finances, look at how you're investing your money, and allocate how to invest in things that are risky and things that are more safe. Again, allocate more to the safe side of things, but do save some of them for things that are risky because you can make a lot of money in those investments as well. Thanks for joining. I have left some contact details here in case you want to email us about any questions. However, please talk to the people that invited you directly. Ask them to add you to the group. There's over 300 members in the GBK group right now, in my team anyway. Worldwide, there's probably a lot more. But then in the group, you can ask questions, find out more, and we're a big family, so it will be nice for you to join us and get involved. Thanks. I'm Dele. Nice speaking to you.